cryptocurrencies, Bitcoin, Ether, they have corrected with the equity markets.
American investor and founder of ARK Invest has shared her insight on inflation, money growth, rising oil prices, and cryptocurrencies. On inflation, the CEO and CIO explains that things are slowly returning to normal both on the monetary and fiscal policy end. Though there are increasing fears that the Fed will raise rates too soon and too fast, Cathie believes that things will progress at a much slower rate. She explains that money growth and other fiscal and monetary policy signals are already slowing down, which will help the Fed make a better economic decision concerning interest rates hike in March. Welcome to Savvy Finance. In this video, we examine Cathie Wood's thoughts on rising oil prices, the correction in the crypto market, and inflation. Please watch the video to the end to listen to the investor's prediction on how the Fed will increase interest rates and the effects that could have on the economy. If you are yet to do so, remember to give this video a thumbs up. Enjoy. Cathie Wood, the CEO and CIO of ARK Invest, has been under a lot of scrutiny since last year when her funds took a plunge. Many people believe that ARK Invest's portfolio choices only performed well during the pandemic because of the lockdown and that the firm will continue to take a downward plunge. However, Cathie continues to support her choice for her funds, stating that they are much more beyond stay-at-home stocks. According to Wood, these companies will continue to experience exponential growth because of their revolutionary qualities. The CIO believes that industries like DNA sequencing, blockchain technologies, energy storage, adaptive robotics, and artificial intelligence are here to stay, and everyone should be putting their money in these sectors. On inflation, Cathie Wood believes things will gradually return to normal in 2022. She explains that there are already signs of significant tightening, especially a drastic reduction in money growth. Listen to Cathie's explanation of the U.S. monetary policies for 2022.
This fear that inflation at 7%, which is the CPI right now, on a year-over-year basis, is getting embedded into the system because wages are rising and so forth. So what we're seeing on the monetary and fiscal front right now is effectively significant tightening already. On the monetary front, we've seen money growth go from 27% at its peak during the coronavirus, the depths of the coronavirus, to 13% recently. But if you look at it a little more closely and in a shorter term time horizon, we're down to 8% growth on a 3-month basis, 6.5% on a 2-month basis. And we believe that money growth will continue to slow quite significantly, especially if the Fed does raise interest rates. Now, we wouldn't be surprised to see the interest rates go up in March. Many people, after today's employment report, are beginning to think that 50 basis points is the number, that the Fed will basically telegraph that it means business and that it's going to head inflation off at the pass. They may do that. And if they do, however, we think the stars are aligning in such a way that they will get the message very quickly that they don't need to do much more. Another break on them is, a political year, the midterm elections. The Fed does not like to get in the middle of midterm elections, doesn't want to be accused of any political dynamic. So they might want to do the 50 basis points just to say, okay, we're done for a while. Now, what's interesting about the market's reaction to this possibility is that strategists out in our world are now trying to leapfrog each other, saying, okay, I think it's at least 3 more tightenings after that, or 4. I've even heard altogether 7. So the reaction you've seen in the equity market recently is fear, I think, that the Fed is going to go too far, too fast.
On the fiscal policy end, Cathie also sees things improving significantly in 2022. She explains fiscal policy on a 12-month moving average basis is almost down to 0 now, after peaking at over 50% growth during the pandemic. Cathie also predicts that things will get much more interesting by the end of 2022, with both fiscal and monetary policies going in the reverse. Here's Cathie explaining the effects of rising oil prices on the economy in general.
The fiscal policy side of things. If you look at fiscal policy on a 12-month moving average basis, so federal outlays, they peaked at more than 50% growth during 2020. They're nearing zero now on a year-over-year basis. And if you just follow this through, the programs that are rolling off, for example, the child care credits per child that ended, I think, at the end of December, we are going to see fiscal outlays down about 19% by the end of this year. So again, fiscal policy is in reverse. So you've got both fiscal and monetary policy moving in the same direction pretty quickly, potentially. I think that one of the reasons this is happening on the monetary side is oil prices. I do believe, besides wages, the Fed is looking at oil prices and saying, wow, there must be enough money in the system to accommodate this oil price shock. And anyone who's read history knows that in the early 70s, when oil prices quadrupled after the oil cartel basically got together and just jacked prices up, the accusation then, which was true, is that the Fed accommodated that price shock, and that price shock fed through the system for years and years and years. Basically, we needed Chairman Volcker at the Fed in the late 70s and early 80s to really choke money supply. So it does seem like there is some fear that this could be the second go of that. And yet we look at oil, what's going on with oil prices right now, quite differently. We do not believe that it is an indicator of inflation. We believe it's a tax increase. It is a supply shock. That is true. The shortfall in supply. Demand has not passed where it was pre-COVID. So shortfall in supply, but it's a tax, and it's a terrible tax on the lower income groups.
Cathie Wood also talks briefly about cryptocurrencies, which she describes as money, financial, or next-gen internet revolution. The industry is a major part of Cathie's funds, and she believes there is going to be explosive growth in the space. Currently, Cathie Wood believes that the cryptocurrency industry is tightening and evolving.
Cryptocurrencies, Bitcoin, Ether, they have corrected with the equity markets. More and more hedge funds are involved in them. So when the market corrects, we do see higher correlations these days. Although over a full market cycle, the correlation between crypto assets and any other asset is extremely low, which means for diversification purposes, crypto is a very interesting asset.
You think Cathie is right about the one-time 50 basis point hike in interest rates. Many other experts and similar occurrences in the past seem to be telling a different story. If interest rates are increased by 0.5% in March, there is no saying how far the Fed will go after that and how all these would further affect the market. But if the figures do improve, as Cathie predicts, things might progress at a much slower rate. Ensure you leave your comment in the comment section below telling us what you can make of Cathie Wood's thoughts on these crucial economic signals. Also, remember to drop a thumbs up for the video and come back for more. Thanks for watching.